Coming off of some of the inflationary conversations before, fold that into some of the fundamental analysis, how you're thinking about, well, closing in on these record highs again, a cyclical rotation and a rotation into small from large.
Yeah, so just getting to the inflation conversation, I think this is really important because you have to first set the stage for what type of inflationary environment that we're going to be in. And we talk a lot using words like transitory, which we are no longer using anymore because, quite frankly, I think it's a little bit misleading. So our view is one where the inflationary pressures that we're seeing is going to moderate next year. So we're expecting headline inflation to be anywhere around, let's say, 3 to 3.5%. Now, here's the thing, is that moderation is still going to feel a lot higher than it has for the past decade and is probably going to average that level going forward. So I think we have to get used to a higher inflationary environment than what we've been accustomed to, but it's not going to be at the levels that we've seen.
Kristen, are people asking you for hedges? Are you finding hedges a little bit more in terms of that inflationary pressure?
So I think this is the key thing. If you're worried about inflationary pressure, if you're worried about rising rates, what should you do and shouldn't you do in your portfolio? So the first thing is cash. Cash is actually punitive in this inflationary environment. And when I say cash, it's actually very different than operating cash that you need for operating expenses. We're talking about cash as an investment. So cash is punitive, duration is punitive. So the key thing here is really finding alternative sources of yield. And that can be in dividend grower stocks. It can actually be in using the options market to help monetize volatility when we've seen those spikes. But finding yield without duration is really the key in this type of environment.
With regards to equities, though, I mean, how do you value things in a market where I guess some things seem to be very overvalued? You talk about some of the run-up that we've seen in some of the tech stocks here. They continue to sort of act to a certain extent as a defensive play, but it's going to be a long time coming for some of these names to sort of catch up with some of these multiples.
Do you know what's really interesting when you look at some of the multiples is if we actually take out the top 8 stocks in the S&P 500, which account for, granted, about 30% of the market capitalization, the forward PE ratio is trading at about 18 times. So it's very different than some of the headlines. So really you have those largest companies that are really making up the bulk of that. And so the question is adjusting some of our expectations for profitability. And I think that's a key because corporate profitability growth at around 45%, somewhere in that ballpark, right? What we've seen year over year, we can't anticipate that going forward. We have to moderate some of our expectations, just like with inflation. We have to moderate some of our profitability expectations to really come in at about 8% over the next 2 years, which is going to feel different.
All right, in conversation right now with Kristen Bitterly, Regional Head of Investments for North America over at Citi Private Bank, helping us count down to the close, just about 6 minutes away. Going to get back to Kristen in just 1 second. I want to jump over to Taylor. You're at the board. What are you watching?
I want to take a look at some of the big tech stocks from Maine that we've been following. We're talking a lot about some of the EV makers, some of the autonomous vehicles. Take a look at shares of Apple. You're up 3% on the day on reports that they are working on their cars to make it just that fully autonomous model. This has been a years-long project, but now we hear that they are concentrating on just fully that self-driving ability, all without human intervention. We know, of course, that the Apple car is Silicon Valley's worst kept secret, but Dan Ives coming out today and saying it is a matter of when, not if, when it comes to this car. Those shares are up about 3%. Change of board. Kristen, let me bring you back in here. It is a 5-year break-even chart that we show you, and near these records that we come off just a little bit today. But fold this into when you start to get worried about inflation hitting the consumer, because we know that it is the consumer that's driving this economy. Are consumers getting the sense of pulling back on some of that demand, and then does that feed through on some of the top line revenue growth of these companies?
Well, I think the key that no one really talks about, we tend to talk about the supply side of the equation when it comes to inflation and some of the supply chain disruption, but we don't focus enough on the demand side. And so I think one of the things in terms of demand, there's a number of different things that won't directly impact the consumer, or maybe I should say are actually driven by the consumer. So part of it, just the seasonality, right? Going into the holiday season, going into the winter months, we always see these spikes in demand. I think the second thing is also with the discontinuation discontinuation of the stimulus checks, you basically see that savings rate coming down. So we've seen that excess of around $2 trillion in terms of what's being held in accounts. You're seeing that start to come down. And I also think the last thing that we have to talk about is the pandemic, right? Delta did impact the US, and we saw that in terms of that shift from, instead of spending on services, we were spending on goods. So we could see with some abatement of the pandemic, a shift there. So we expect the demand side of the equation actually to stabilize.
Kristen, just on that point of the pandemic abating, when we're seeing numbers tick up so significantly in parts of Europe, is there any worry, any caution that you're currently having in the United States?
So I think there's always caution and worry, right? And we're celebrating all of the victories that we have. So, for example, my children getting their first dose of the vaccine was a big day in our household. But I think when you look at, we now have vaccines, we now have really positive information around treatments as well. And so, yes, we're going to have to learn. I think everyone's using the term endemic, right? So this is something, we're not going to have a post-COVID world. It's something that we're going to have to learn to live with. But now that we have all of these tools, if we continue to see vaccination rates going up and we continue to see this development on the treatment side, it's a very positive piece of news in terms of it becoming endemic as opposed to a major disruption.